Hello, everyone, and welcome to this special show. I'm Avan Dabash. Joining me today, we've got Rashmi Kwatra. She's the founder and CIO of 16th Street Capital, which is a Singapore-based hedge fund with investments in India, Bangladesh, the Philippines, and concentrated in South and Southeast Asia. With assets under management of close to $350 million and top holdings, including the likes of Bajaj Finserv and Trent, we talked to Rashmi about her long-term growth outlook as well as the India story. Thank you so much, Rashmi, for taking time out and being with us on ET Now. To begin with, I know you're a long-term believer of investing in companies for the long haul, 10 years to 30 years in compounding. You've been cultivating relationships, you've been meeting a lot of managements on ground. I just want to know, has India lived up to your expectations in terms of the market performance?
Absolutely. So thanks for having me, Avan. And as mentioned, this part of the world, both South and Southeast Asia, is a region that I think shows tremendous long-term potential. And there's been, remarkable change and strides in India. We've enjoyed investing in the economy and think, we're still in the early days and there's tremendous structural growth for the Indian market in the years to come.
To just sort of build up on that question, Rashmi, I just want to understand what the potential is for India's long-term growth versus some of the other emerging markets, because it clearly seems like it's an appealing market to long-term investors, largely on the back of the kind of macroeconomic growth, the fact that we haven't been all too impacted by the kind of global concerns, particularly on the inflation front, central bank action, etc. So do you think in that sense, India stands out versus the emerging market peers?
So I think, India is in a league of its own. The only maybe region that comes close as a block is Southeast Asia, as I mentioned. And there are many kind of structural thematic trends why this is the case. We have in India and Southeast Asia structurally a demographic population that's very, people are still entering the workforce in India. In most of the, developed markets, you're seeing that the demographic dividend is no longer so positive, and the young population is supporting an elderly population. So India is at the right stage where people are entering the workforce, therefore household incomes are growing, leading to a higher propensity to spend. In terms of how it compares to other emerging markets, so there are a few markets, namely in Southeast Asia, where I see similar structural tech trends, Indonesia, Philippines, we talked about a couple of them. But India is in relatively better off, I think, than most emerging markets, also in terms of where it is from a domestic capital base. So I think what you've seen this year is that, as the country goes through its stages of development, the wealth of the population also increases, and the institutionalization of domestic capital. And India is now at a cusp where, we have enough savings and savings channeled into financial services and the capital markets, where we're not as reliant on foreign inflows or foreign capital of more developed markets as we have been in the past. So I think that's what's setting India up, kind of differentiating it from some emerging markets today. And, there are many structural trends we can talk about as to why it's such an interesting investment horizon for many years to come for India.
Yes, so many describe it as the manufacturing renaissance as well in India. Now, Rashmi, let's deep dive into the portfolio. Bajaj Finserv, that's one of the top holdings. I just want to understand what made the company appealing. Is it the holding of Bajaj Finance, or is it the entire insurance play that you're betting on that made Bajaj Finserv look appealing?
So in general, right, I think financial services is a sector that is very appealing in the Indian context. When I launched this fund Avan, 5 years ago, people were asking me, why now? Why India? Why Southeast Asia now? And I was talking about, what's happening in digital and financial inclusion. And that it's really remarkable that, maybe just 5 years ago, somebody couldn't tell the difference between Avan or Rashmi. But today, with Aadhaar, everybody has a national identity. India has the largest biometric database in the world of its citizens. And so it's phenomenal that over the last 5 years, almost everybody can get a bank account. However, household credit as a percentage of GDP in India is still sub 20%. In markets like the United States and the United Kingdom, it's over 80%. So we are still at a very early stage of credit penetration. So there's a long way to grow in the credit business of something like Bajaj Finance. But it's not just about credit growth. When you layer on services like insurance, as you mentioned, Avan, we are so early. Most Indians still don't have health insurance. If you speak to your peers in the US or the UK, they do have health insurance. So we're at a very early stage of financial products. And so we're just as excited about their insurance business, the asset management business. And so Bajaj Finserv allows us kind of access to partner with a phenomenal management team, which is very important to us, that has demonstrated, they're ethical and aligned with their shareholders. They've done the right things in the past to really, take market share, build up a resilient business. And they're in industries that we see very long runways for growth where, incremental return on capital can be very high. So it's all of the above, Avan.
Yes, indeed. And since you're so excited about the insurance business, about asset management, I'm curious to understand why there isn't just a pure play insurance stock in the entire portfolio.
It's not that we don't, believe in the pure play insurance players. Some of them are doing a fantastic job executing. I still think it's a very long, large market. You will see new players also grab market share. And we think the entire space, be it the platform players, the direct players, are going to have very, very interesting and long runways. We really take a very selective approach to who we partner with.
Fair enough. That's insurance. And then there's also trend that makes it to the list. And let's just understand a little bit more about that space as a whole from your perspective, Rashmi. Would it be the value retail proposition that's looking appealing? Or is it purely, betting on how well Zara is performing, for instance, or the Tata Group, which is known for its strong businesses?
So again, Avan, you've hit the nail in terms of it's all of the above for us, right? So first, when we're looking at investing,
it's a combination.
Yes. So as I mentioned, we really think of ourselves as partners for the entrepreneurs and the management teams and the founders that we're investing in. We're fiduciaries of capital to our clients and partners. So they trust us to really do our work, our diligence, and partner with the right and ethical people. So the fact that Trent is run by the Tata Group and has historically demonstrated that they are ethical in terms of decision-making and partnership mentality is important to us. Secondly, what's important to us is, the fact that, historically they've demonstrated that they make wise capital allocation decisions. They think very long-term, very focused. So if you've ever spoken to the management of Trent, you'll hear that they are so laser focused in what they're doing. It's execution first, execution second, execution third. So it started with this JV with Zara, which is fantastic. It shows that even Inditex believes that the group is a great partner and an ethical partner for them to grow in India. But, Zara actually, the average selling price of a garment in Zara is almost $50 or 4,000 rupees. It's still very high for the Indian consumer. So Zara today has 50 stores in India, and they can open 2 or 3. Trent can open 2 or 3 on the behalf of Inditex. But what the management team was able to do with that in terms of, learn the supply chain, learn how to effectively manage asset turn, learn how to think about customer preferences and be really focused on customer first, and create a format that is more adaptable and a much better fit for the Indian consumer. That's really when I got excited. So when they started to pilot the Zudio store format, Zudio is a much more smaller store format, value retail, as you say. The average selling price is $7 for a garment, versus $50, just shy of 500 rupees, much more affordable for the Indian consumer. And the way that they've been able to do this in terms of their capex per store, for example, is half that of the next best value retail format. Yet their sales per square foot is double that. So you can see once again, their execution focus, the fact that they're doing it much better than everywhere else. And they've now cracked a model that is much more scalable. because as I mentioned, the incremental return on capital and the runway for growth for that is very important to us. And with Zudio, so I watched as they slowly opened from 1 store to 32 stores. Took them almost as much time to open 32 stores as it did from them to go to 32 to 200, which is where they are today. And it'll take them just that amount of time to go from 200 to 1,000. So for us, it's really, a management team that's shown that they are very long-term and focused. They were slow at the start, but when they crack it, they can really have created a model and execution capabilities and prudence in capital allocation to be able to scale for a very, very long time to come. So that's what we're excited about.
Yeah, that's pretty interesting in terms of the capex per store and the sales per store that the company enjoys. Moving down further then and taking a look at the portfolio, there's APL Apollo Tubes, steel tube manufacturer. Given the fact that it is so closely linked to cyclicality, and contingent on raw material price movement, is that a bit of a concern?
So it's actually not. So while steel is a large raw material for all piping companies, including APL Apollo, what's happening is that value-added services is moving as a category in leaps and bounds. So APL Apollo has a huge market share in value-added services when it comes to piping, etc. And so they are able to acquire steel at a cost advantage to all of their players. They have, above 50% market share, so their cost advantage is very large. And the thesis comes from the fact that there's just multi-pronged growth in terms of value-added services where their products are being used in residential construction, home construction. And so you see that, actually their margins aren't as determined over the years by fluctuations in steel prices, but more so the mix change to be more value-added services. And as they continue on that journey, they become much more comparable to a consumer goods company than a cyclical company.
Rashmi, I'm curious because there's no pure play banks in the portfolio at all. Given the kind of weightage that we have within the banking sector in India, the fact that this leg of the bull market has primarily been led by banks, be it private names or even some of the much smaller public sector banks, how come there's no mention of that?
So I think we're very fortunate that we're at a size and scale where I can be very selective. So again, I believe, financial services, banks have a long runway for growth, but, we don't have to own HDFC Bank or ICICI Bank, even though they're fantastic companies. And we can be a little nuanced, to kind of find the next, a company that we think is maybe earlier in their stage of growth and has, an even long runway, maybe higher rates of returns. And we're really focused on doing the best work. And I think that's what differentiates us from maybe, other global larger funds that have to put a lot of capital to work and don't have the resources to get to know these markets inside out. But we have, a relatively large team on the ground in India, on the ground in Southeast Asia, hunting, for the best companies. And it's really a reflection of where we see are the best growth potentials coupled by the greatest management teams. And that's not to say that the banks aren't going to be great investments, but maybe we think we can do a little better.
Okay, and when you do find that name, we'll perhaps reconnect with you and get in a more in-depth analysis of your outlook on banks in India. But that aside, then there's Swiggy as well in the portfolio, and just wanted to know your outlook as to how you're just looking at the food tech business in India, how it's grown, the profitability challenges, how we compare to the rest of the globe. What's the outlook?
So I think we have here now a clear duopoly, right, in terms of the aggregators of food delivery, and that will be very leads to a potentially very profitable scenario where both operators are focused on scale, but also higher average order volumes and making their services more integral to the restaurants as well as the customers, so that they have the ability to charge for better service. So we're going to see that monetization realm continue to progress, where you have pretty rational competition. But what's really interesting is that these players are also run by quite fantastic founders. So Harsha, who runs Swiggy, is very long-term orientated. He's built the business step by step, thinks 20, 30 years, and still has the hunger to plan for 20, 30 years. So I think you're only seeing the first innings of what this platform will really offer Instamart. We were just starting to see that once you've captivated the eyeballs of so many customers in India, what can you layer on, and what these businesses will really look like 5, 10 years from now, I think will be very different from what they look like today.
So the long-term plan is looking fairly optimistic, but just curious, given that you're in this space, there has been a lot of research that's been done. What's the view on Zomato? Why, perhaps that didn't make the cut? You did, flag off the fact that there is that clear duopoly. So what's your outlook on both of these companies, if you could share?
So again, for me, we take a concentrated approach to investing, right? So we don't necessarily need exposure to both companies in the industry. And we think that we've picked one where the founders really, really think very long term.
Let's understand your outlook on the IT sector as well. It's an appealing space. The valuations look fairly compelling at the current juncture. The companies offer dividends. There's buybacks as well. Given that you are concentrated in fintech, what's the sense when it comes to just pure play IT in India?
So we're not just concentrated in fintech, right? We range. We're not bound by our portfolio goes from consumption to retail, right, to financial services to technology. And I believe IT services as a sector for both India as well as Southeast Asia is very interesting, right? So you just don't have enough engineers in the world to power what's happening in terms of everybody moving on cloud and digitalization globally. So India will continue to supply the world with more engineers, and that's not changing anytime soon. The reason we don't have exposure to IT services in India is actually because one of our larger holdings is an IT services company in Vietnam. So Vietnam is even in an earlier stage of growth where they have incredible IT talent for affordable rates, and people are looking to diversify away from India and China. And so we've backed a very successful IT services company in Vietnam that's growing 25% per year at very affordable valuations. So again, just because we don't own something doesn't mean that we don't believe in the thesis. It's just we have the luxury of being very concentrated about our holdings.
And there's also the e-commerce gaming company that's C. I just want to understand how you're looking at this. We only have one listed player in the gaming space, online gaming space in India, which is Nazara Tech. But just want to understand as to how you're looking at this space as a whole in India. Is there anything that's catching your eye?
So very different. So C Limited, again, for us, the interest there is in its e-commerce vertical. And again, e-commerce in Southeast Asia is at a stage where it's much less competitive than in India. Gaming in India, I think there are a lot of regulatory changes to come, and it's still nascent. So we have not yet invested in gaming in India, though we think there are some beautiful businesses being built, both private and public, as you mentioned. What
about Saregama? Give us the rationale as to why that business stood out, the company.
So, we're seeing in general, right, a move to short form video, short form content. Saregama has one of the largest libraries of Indian music. It has this content which is so valuable. Indian music is only going to be more prevalent to the global audience, and it has the ability to monetize in a way that it hasn't before. Before, you'd make money even though you had the rights to an Indian song, maybe when a movie director used it, maybe when they played it at an event or concert, and maybe if you're good at catching it when they played at a wedding. But now, because of short form video content, be it, the YouTube and TikToks of the world, every time somebody uploads a short form video and plays an Indian song, from back in the day up until today's latest hits, Saregama can monetize. And I think what they've done to instill that engine to really be able to work with the counterparties like YouTube, Spotify, and the TikToks of the world to monetize their content is extremely interesting. And in a world where we're moving toward shorter form content, I think it's very interesting for a player like Saregama that has these assets already paid for.
And how you're looking at the overall consumption story, given the fact that, you did flag off that household spending is growing and that's likely to drive consumption. Are there concerns whatsoever regarding the high inflationary scenario?
I think, you always have to keep an eye out for inflation. We have a growing working age population and some structural trends that are helping in parts of the world minimize those effects on inflation. So as long as we continue to see, really growth in the opportunity set that outweighs inflation, I think we are relatively much better off. And that's what we're seeing in these markets, right? The employment opportunities, the growth in India powering even a global workforce is so large that today that growth in household income is making up for some of the inflationary pressures.
Okay, that's been an interesting take on the overall portfolio strategy. And what's more interesting, Rashmi, is that, you were helping out with your father's export business, so you were interested in it at the tender age of 10 and you bought your first stock at the age of 12. So clearly a lot of self-study has been done.
Yes, correct, Juan. I think I'm very fortunate that I got exposed to how to run a business, how to think about inventory management, supply chain, working in my father's business from a young age. It taught me, how to think business first. So when we invest, we're looking at really the business operating metrics. Will this business strategy and management team work out versus, what are the equity markets or share price saying today? And as you mentioned, I've been doing this for a long time. So I was fortunate to see how, investing early in businesses and sticking with them for a long time is a very sure way, to compound capital and grow wealth, as well as perhaps contribute to the development of these markets. So for me, it was about, launching a fund that acted as raising long-term capital so that we could also invest with very long-term approach in our markets and provide our founders and companies with the ability to think long-term, which I think overall will help, the development of some of these economies that we care very much about.
Okay, and I know you travel extensively across Southeast Asia. Hope to see you in India sometime soon. And thank you so much, Rashmi, for accommodating this interview.
My pleasure. Nice to meet you, Evan. Take care.